Lincoln Productions.
Information contained in this video is for educational purposes only. Everybody's financial situation is different, so some strategies covered in this video may not be appropriate for you. Trading in leverage products is risky and should only make up a small part of an overall investment strategy. To become a better trader, you need to take personal responsibility for any trading losses. Views of people being interviewed are not necessarily endorsed by this channel. We try to present many opposing views and let you decide. David is not a licensed financial advisor and is not trying to sell you anything. So sit back, relax, and enjoy the show.
All right, folks, we do have breaking news for the UVXY position. I did do a big trade that actually completely changes the position right now. We're going to have to see if it works out or not. It was an aggressive risk-on trade, but what it does is it would allow us to make back the money we lost a lot more quickly than before. And instead of UVXY having to get all the way down, remember before the trade we had on was the September 27, 24, I'm sorry, the October 27, 24 put spread. So for that to be profitable, to the most profitability, we would have to have UVXY down to 24 by the end of October, which is somewhat distant. It's 73 days from now. If we look at the chart of UVXY right now, that, it seems very far off to expect this to go all the way back down to 24. Okay, look at this spike that we have. If I move out of the way for a second, you can see the spike. And the question is, all right, well, is that just foolhardy to think that this thing can get all the way back down to 24? If we put in some numbers here on the side by tightening this up here, you can see, okay, the chart, we got all the way up to 42. Now we're back to 35. But is it foolhardy to have this spread on the 27, 24? That seems way, way out of the money. So what we did was we rolled this forward for the same number of spreads. We rolled this forward from 73 days to only 17 days, but we rolled the strikes up. So here's the trade that just went down in UVXY. And like I said, this is a risk-on trade. Some people are going to think it's foolhardy, but here we go. Risk is on. So here's the trade. What we did was we bought this roll, and we'll show it to you right here. Here's the trade. Instead, we rolled from having the October 27, 24 put spread on for even money because I did it for 4 cents credit. So that covers the 4 cents covers my commissions. So because it's a penny each side, right? So 4 sides, 4 cents. So we rolled for even money from the October with 73 days to go, 27, 24 put spread to the August. Now, in this case, only 2 points between the strikes instead of 3. So instead of a maximum of $9,000 74 days from now, we have a maximum of $6,000 only 17 days from now. So this is risk on, but we come out of the spike in the next 3 weeks, even a little bit. All we have to do is come a little bit out of the spike in the next 3 weeks, and this account will go from 3,300 to 6,000. And the other thing with this trade is we can start to look, if we can just get a little move down, we can start to look to sell and turn this into some sort of condor. So if we look here at the chart for the trade, if we look to August, if this moves down, we can look to sell something to the downside, like if this can move back to like 30, we could sell maybe the 27-25 put spread against it and turn this into a big condor. But this is definitely more of a risky trade than the one we have on, and we need to come out of the spike in the next 3 weeks for this to work. But the good news is we don't need this anymore to go down $11, $12 for this to be profitable, a maximum profitability. All we need is for this to go down by $3, and we are at maximum profitability on this trade. So a risky trade, risk on, really rolling the dice here to some extent, but the belief is that we do come out of this spike within the next 3 weeks, and that the worst of it is over for right now. That's the bet we have on. So we'll see what happens with the trade. Once again, we rolled it from the October 27-24 put spread into the 23 August. In August, we bought the 35 put and we sold the 33 put. So this trade, now the position, maximum profitability if we're 33 or below in 17 days, as opposed to being below 24 in 73 days. So I'm interested to see what you think of this trade. It's a little bit of a clickbait title, but I do think that people will consider this. Some people will consider this a mistake because it's a very aggressive move. So sort of a clickbaity title to some extent, but I do think that several VIX traders will consider this an error, and that's why I put that. I hope, man accounts, that you're doing a little bit better today with your positions with this stuff coming in. All right, thanks for watching, everybody, and we'll keep you updated on what happens to the position next.